mentioned that other day.
All I know
About
is I'm already. I mean, it was. It's, sound issues, there's light issues, I'm having this like hair issue right now. No, back at my place. He looks like a very girly dog because his name's Indiana. And everyone goes, oh, is this a girl? It's like, no. Have you never seen Indiana Jones? Exactly. It's a generational gap, I swear. Anyone on
who will be moderating today's discussion.
Thank you very much, Caitlin. Hello, everyone. Thank you for coming out. Venture capital in the tech sector, a pretty hot topic. This event is oversubscribed. So thank you to Kirk ISS. So we can use up our time the best way we can. I'm going to divide today's discussion into three topics. The first one is focused on early stage tech ventures. Talk about disruption, about venture capital, about scaling a business. Then we'll talk about, get a little more specific here and talk about Cayman sources. So what is the market for venture capital here? And then finally, we hope to talk to ideas, some thoughts that we may have for expanding access to venture capital, how you can look at it. So we'll jump into the first topic, early stage tech ventures. Aaron, talk to us about tech disruption. How do you define disruptive business models?
Thanks, Josh. So I'm going to break the ice because I'm the first person speaking this evening. And interesting fact, Josh defined what I do better than I do. And it blew me away. I had to tell him that today. But it segues into disruption because I have a real passion for disruption, innovative ideas that disrupt industries. And sometimes you have a passion for something and you don't yet know that, you don't know what it's defined by. So I spent a lot of time researching people who have disrupted industries. And, just to answer the question, I'm going to go to the dictionary type, definition, which says really to cause a break or interruption in the normal course or continuation of some activity, process, etc. It causes a radical change to an existing industry or market. Now, disruption is one of those buzzwords. And in our internal discussion before coming here today, one of the things I said is I'm big on definitions. I'm not good at repeating it verbatim, as you realize, because I have to read from my phone. But it's really important to understand intimately what these buzzwords mean, because some venture capitalists come into a market and say, yeah, they're looking for the next disruptive business, but then they try to put them into all of these boxes and categories of what has been done before, and all of the financial metrics that they would have used before, and all of the business models that would have been done before. We're talking history. Disruptive companies, technology, business ideas, and models are not based on history. They're built on history, but not based on it. They're based on some idea, something that some guy or some lady is very passionate about and pursues relentlessly. My gosh, this is what thank you so much.
That was disruptive.
So here's the thing, right? And again, spending so much time looking at these guys, whether it's an Elon Musk or a Hershey's or a Bill Gates or a Ford, Rockefeller, whoever it is, countless hours looking at these guys, and you realize there's some common traits of the individual, the purpose behind what they did, and the results of it. So when we speak about disruption, it goes deeper than the dictionary meaning. It goes beyond the categories that we put businesses in when we develop some sort of a matrix to qualify a business for financing or backing. And these are businesses, for want of a better terminology, that operate in that magical realm. When Elon Musk tells the world he's going to go into the space industry, everyone says you're crazy. The automotive industry, you're crazy. Oh, I'm going to do it at the same time. Well, someone lock him up. But you start to realize that these guys attract a very high level of talent. They're a relentless pursuit for something that's beyond the business. They're pursuing an idea. If you're pursuing a way to make more money or gain market share, based on what I've seen, at least, and I stand to be corrected, they're never disrupted. These guys are driven by an idea of changing how we live as humans. They're driven by an idea of solving some problem that impacts just how we exist. And that's where disruption begins. The numbers come afterwards, and usually the payoff is significantly better than any normal business. So that's my long-winded answer. Thank you.
Thanks. And let's connect this to sort of how venture capital is working here. Michael, you're part of the venture capital fund. Tell us about the fund and what is your investment decision process like? What types of businesses are right for venture capital?
Well, to put it in 2 words, the perfect company for venture capital, it's anything that you can scale. And that means that if it works at $1 million in revenue, it can work at $10 million in revenue, and it gets even faster in terms of growth and the people it attracts and sort of the story that comes along with it. And Elon Musk is one of those people who I would classify as a classic entrepreneur because he's always pushing boundaries and being a very disruptive person in his own way. And you never really know what he's going to do next.
It's disrupted my portfolio.
Oh, yeah. And in terms of venture capital, I see a lot of companies, and it's always driven by the people running them, working in them, and developing in them. And he's one of those sort of types who make that situation happen. And it's never really about the idea or how much they're making at a certain point in time. It's always knowing at face value and what they're doing and what their background is that creates that opportunity to make that big change over the next 10 years.
So it sounds like venture capital looks less for disruption, less for the idea that's going to break something and more for the operation. So you're looking more for operators who can build something.
Not just operators, but people in the tech industry being developers and salespeople. Because to disrupt an industry, you have to be aware of what's going on in the industry. And you can see somebody who does a lot of traveling for work, and he looks at something in his hotel and goes, "Why are we still using TVs, or why are we still using old-fashioned keys to open up our rooms?" And there's always disruption potential in areas like that. And I call it to talk about the way we frame new ideas under existing companies that are already in the public mind, like the Ubers and the Airbnbs and all these new companies that have come out in the most recent few years. We always describe them as over the Uber of delivery, and that's Uber Eats, and they're the Uber of mattress delivery and the sort of industry disruptor. They disrupt it in the same way as Uber, and we apply the same mindset about, we're going to make a lot of money, but also we treat it as the same initial conditions. for what they can be in the next 5 to 10 years. And that's where venture capital comes in, because it's about seeing new ideas and applying them to other parts of an industry that hasn't been disrupted in a while. And the biggest thing I could tell you about seeing a company present to us, and after you guys leave the room, and we sort of huddle together and talk about what we thought about the company we just saw and what they're doing and who's behind them and what they're trying to do. We always classify it as a nice to have idea or a need to have idea. And those things change all the time. You can talk about COVID being a forcing function for what in the last year and a half. And in my mind, we're still going through COVID, and it's hard to tell what's staying the same from before COVID and what's forever changed and what is still changing. And it's very hard to tell.
We have a visual of some of the different stages of companies. I was wondering if you could comment a little bit, or describe to people what types of ventures do you look at? What stage of growth? Are these ideas that are brand new and you don't have a business yet? Or are these things that have actual revenue? Are they actually becoming a real business? Where do you invest?
Well, typically I look at companies in the Series A level, which you'd say they've got maybe 2 million in revenue. And depending on what sort of venture capital firm you talk to, they can focus on annual revenue. Always talk in terms of very specific GAAP revenue. Don't play around with, we're on track to get, $2 million for $1,000 of work we're putting in for the next 2 years. It's really about showing where you are and where you expect to be in the future. And with all stages of venture capital, it's really, you're constantly accelerating, and you're constantly, if you're not going fast enough, you need to almost realize that you're not going fast enough, and you gotta, put in some sort of new delta into the equation. And the way it goes is, I would describe it as like driving a car. You're never in first gear the entire trip you're taking. You're in first gear until you hit, I'm not much of a car person, but until you hit your RPMs. And that can be at a certain speed, but it wildly depends on what kind of product you're doing. Like if you're doing the next Facebook, and here I go again, I'm describing the next thing because that's how I view companies. And it's really about who your market is and how quickly they grow. And that varies wildly depending if you're selling to individuals, you're selling to mid-sized companies, which can be about 100, not the Facebooks and the Microsofts and the IBMs, but somewhere in between being, an individual person who buys from your local restaurant and somebody who is selling all the pencils to everybody on islands. And with that, you get into sort of where your speed is in terms of your growth. And I'll bring in the car metaphor again. Your angel stage is very early, you're probably not making any money yet, and it's all about showing that you can create a product and get the ball rolling on something that in a couple of years is going to have a huge impact. And the point of the angel stage is to start up an idea, throw lots of people at it, and you're not expecting to throw a lot of money at that point because you're still not sure if it's going to work out for you. And if you get nowhere in 12 months, you either throw a lot more money at it and then it gets very expensive, and people start reevaluating if you have a good idea or not, or you've shown that you've got the first prototype and it looks like in another 6 months it'll start doing something. And then once you get to your seed stage, it's all about showing that you can sell this to people somehow. And for some companies, they can't find any buyers for a great idea because all founders believe their idea is the best idea that's ever been come up with since sliced bread. And I love to see it because I would not stay in the same room with someone who believed otherwise. Because if you don't think your idea is the best in the world, then you don't really plan to keep going with it. You don't want to. You're not committed to your own idea. So why would we, as a venture fund, focus on you guys when we've got dozens of other people we saw in the last week who think that these other people are a lot more committed and they want to make it work. And then you get to Series A, which is where you sort of start to see that real traction. And that's past what we call the valley of death, where we're starting to lose less money as opposed to just making money. And that's a mess in itself sometimes, because I think half of all startups don't make it past that seed stage. So if you've got 10 companies, 5 of them are not going to get to a Series A.
So I think a theme that was kind of emerging is that not all startups, not all ventures are appropriate for venture capital. It's not necessarily the right path for them. They may not scale well. They may not be disruptive enough. So identifying whether your business it is appropriate for venture capital and therefore be able to find some is a challenge in itself. Let's segue to the next topic, which is a little more specific about some of the Cayman sources. So let's bring it a little closer to home here. Ian, can you tell us about the existing market for startup capital in Cayman? What are some of the formal or informal sources?
Yes. So, like looking out there, obviously I recognize a lot of people. I hope you recognize me. We're friends. So I came down here a number of years ago with the intention, setting up a company or a buzz. It doesn't really matter. This conversation isn't about company, but it's really about the journey. And like when I came here initially, I was looking to raise a certain sum of capital. It never happened, and obviously I kept on like moving the goalposts in order to meet my objectives in the best way I could. So we have actually managed to get devices that are going in market. They're actually, I was hoping it would say they're in market today, but they're actually in transit right now. But over this last 3.5 year journey, like it's really kind of brought to the fore like how important seed capital is. For my particular opinion, I believe that the ability to raise capital on this island is widely diminished. We basically have 2 sources of wealth on this island, one being like high net worth individuals, and then the other being funds. Now, when it comes to high net worth individuals, these are generally people that have moved here, they've already taken a lot of risk in their life, and ultimately to take on risk at this stage is just not all that attractive. It's more about wealth retention rather than going out and doing the next best thing. So looking to them to address the seed capital issue here may not reap the result that we would hope. And on the other side, then we have funds. So people basically taking looking at the beneficial tax structures here. But once again, it's all about wealth retention and protectionism over these large sums of capital. So we are in a kind of a paradigm, and I think the best thing to bring it home would be I accidentally came across a book. I'm not really a reader. The audiobooks I'm down with, but when I came across this book, I had to read it. So it's called More Good Jobs. It's by Martin Babinick and what's his name? Martin Fried. So these are the guys that set up like Techstar and the Foundry. And what they did was, like, in their capacity as big investors and trying to change the paradigm in terms of like creating like entrepreneurial kind of campuses throughout America, they were like, what makes the perfect campus? And they looked at different tax regimes, they looked at access to enterprise centers, they looked at everything right across the board. And the only single determination they could make is if you actually want to diversify your economy, if you want to build good, solid jobs, if you want to basically diversify in that way, the most important thing is seed capital. I believe we will see capital, we will get deal flow, we will have companies coming here en masse. We have every other advantage. The only thing that's basically the only obstruction we have to the best future economy for all residents of the Cayman Islands is that seed capital issue.
Aaron, you've had some experience raising money here from a variety of sources. How do you find the right type of capital, the right mate for your venture? And what have been your experiences with regard to availability of capital?
Wow. I like the analogy you used in asking the question about finding the right mate. But I'll stay away from that so I don't diminish my social share value or whatever was in scripture. But here is the thing. Finding that right source of funding, that right partner, that organization, individual that's going to help you to grow your business by investing in it, putting money into it. What I have found to be successful on my side, and just to give some background, I haven't raised a huge amount of money, but I've been able to go through different stages and iterations of the business that I have now. And that started with friends and family. It went into some level of angel investment, institutional investment. I somehow was able to get money out of banks, unsecured too. Yeah, I know. And also through contracts, where you broker a deal in such a way that you're providing a service, but you structure that contract in a way that it capitalizes your operations to scale and provide those very said services. So you have to become creative. And then also dealing with an equity finance company, which was a very interesting experience. And to get back now to how do we approach that? Getting back also to the analogy of mate. You want someone to like you. It's kind of good to look yourself in the mirror and ask yourself, would you like you? If you have a business and you want someone to invest in your business, and I say you, but it's really my story, I had to ask myself, am I willing to bet on me? Am I willing to take my life savings, put everything I own, give up my career in engineering and my job and job prospects, stop looking at positions that are being advertised where I can be paid very well because I'm skilled and qualified enough to get those jobs? Am I willing to give all of that up to invest in me and my ideas and my business? And that was the first stage. And it's a very intimate thing to get back to, again, to meeting. It's a very intimate thing. So I had to look myself in the mirror, ask those questions about myself and my business. And if the answer was yes, then that's the first step to getting a venture capital investment in the company. So the next stage is this. All right, so I'm comfortable enough with myself, I believe enough that I'll invest in myself, but how do I get someone else to invest in me? And it segues even back into some of the discussion earlier and some of the things Mike said about the way the venture capitalist looks at a company that they're going to invest in. And when they do that, they do it through a particular lens. And once you understand that as the entrepreneur, and I have to understand that, I got many no's. It's a painful process. It's a painful process. It's very long. Paulo Coelho, most people here should know the book The Alchemist, was turned on 142 times before he was able to get one publishing company to publish the books. And even then, it didn't go that well. because it was on the second run of the books that it became really popular. And that took time also. And each time we go through that process, and each time I went through that process, I literally stood up in front of the mirror and asked myself, well, the first question was, Aaron, are you crazy? The next question was, this thing that you're pursuing, is it really worthwhile? And every single time the answer was yes. So in the process, I became more convicted in what I was doing, and in the process, more and more people saw what I was doing, and along the way, we developed a bigger team because people came out of organizations that turned me down and supported me in the back door. They introduced me to friends. They said, hey, you need to meet this guy, you need to see this business. So, and to get back to Paulo Coelho, and just about every single other successful entrepreneur in history, it's really a story of persistence combined with an unshakable belief in what you're doing. So, in my journey in dealing with the venture capitalists, I mean, at whatever stage it is, it's that belief factor. And that belief factor, the more you question it, the more you refine your business model. The more you question it, the more you refine your approach to the business. The more you question it, the more you look at how can I tweak it. And the more you question it, you then start to realize, hold on, I'm supposed to be questioning the venture capitalists. Because as Mike said earlier, you have venture capital individuals and companies that come in at different stages and focus in different industries. And within those industries at different stages, Mike said, here's what we look at the Series A level, etc., etc. So what I've started doing is I interview the venture capital company too. They interview me, I interview them. And that's part of the dating process. You know, the questioning goes both ways. And
So,
I mean, that's the best way I think I could put it.
give us a perspective on geography. When you were looking for money, did you look on island? Did you look pan-Caribbean? Did you look in North America? Or were there different experiences across there? And Mike, as well, you're a Toronto-based investor. But after Aaron, give us a sense of your geography you invest in.
This is another thing. The realities of the world. And the realities of the world are geography, in addition to your individual background and your team's background, is going to play a role in how your story unfolds. Not necessarily the outcome. You can have the same very successful outcome, but that journey is different. I chose to be the Cayman Islands for several reasons. Because strategically, on the long term, I know what the plans are, ideally. Cayman, as you know, Ian said earlier, there is wealth here. But what I discovered, which is what I found out after landing and digging in deep, is the mechanisms to transfer that wealth into investment, seed capital stage particularly, is not there. It's very difficult, right? There are a couple of individuals and some organizations now looking into it, but it's very much at the infancy stage. So in the Cayman Islands, it's very difficult to find seed capital. In the US, however, the US has built their economy on going after innovation. So getting seed capital out of the US is much easier. But then you're playing a unique dance, like in my situation where you're registered here, also in the US and stuff, and how they view an investment into an offshore tax-friendly jurisdiction. And that's also a challenge. And I think the narrative needs to change, because what people don't realize is you can land in the US and open a bank account like that in less than an hour. Trying to open a bank account in the Cayman Islands, Turks and Caicos, Bermuda, Bahamas, any offshore jurisdiction, and I have the experience, it takes months. And they dig into your history and background in ways that US banks don't even begin to. So the compliance issues here, the world needs to understand that to do business in the Cayman Islands, you are highly scrutinized. So it's easier in the US, much harder in the Cayman Islands and the Caribbean at large. That's evolving. Jamaica is leading the way. The Cayman Islands is in the best position to leapfrog everyone else.
So we'll get into some more ideas in sort of the next topic, but Mike, can you comment on geography as well?
Yeah, I'd love to. We look at North American companies mostly because when you talk with startups and venture capital, they could be in Europe, they could be in Japan, and that time difference can make it impossible to keep track with them. It's one of the hardest things, and if you can't communicate with those companies, then what's the point in investing in them in the first place? And if you're not if we focus on North America, how we can help is based in North America. We can't help you if you decided to set up shop in Japan because we don't speak any of those local languages. And part of speaking English is it's almost universal. But we focus on North America because it's where we are, and we don't. It's nice for you guys to be a little farther away, but we always like to be able to drive or fly over and be there in a couple hours. It means we can still show up and plan, of course, but it's really to be able to talk in person, because doing a Zoom meeting is as effective as it has been to talk to somebody, but it's not as effective as being in the same room, because you miss out on the chit chat, the local news, the rumors, which are always fun, like Newsday and News 2 and funny stuff like that. But it's really to get the pulse of the company. And in startups, it's about culture. And if everybody's mad at this new, chief operating officer or somebody who showed up and nobody thinks they know what they're doing, then they could be around for a while if nobody sort of talks about it. With somebody can start finding somebody else and making that change work over time, because that's a long commitment for everybody, especially in startups.
So your firm is based in Toronto. You're physically down here. Has the firm invested in any Cayman businesses, and why or why not? So interested in.
Well, here it's a relatively young ecosystem, so stuff like that takes a long time, and part of the difficulty is to get started, and over a long period of time, eventually you see those larger scale companies, but at the same time, it's a small island, and you get all the politics going on and a lot of financial stuff. It's difficult to sort of throw 100 people into a country for just the reason of having everybody here, and you get a lot of pushback in all sorts of things that you don't think about.
So for anybody, what are attractive tech-related or early-stage businesses that are best suitable to Cayman?
Well, the beauty of tech as a startup culture is you can do everything from here. You can do first of all, you do a lot of financing, a lot of financial stuff here. There's plenty of accounting and legal on the islands, and those are two very obvious ones. But as for name a tech industry, you can do it here. That's part of the beauty of tech. You can do it wherever you want in the world.
So we've segued into ideas about how to change, how to expand access that's here. Ian, I'd like to get back to you. How can we expand access to venture capital in Cayman? Should government play a role? What are some ideas?
This is my specialist topic. Strap in, guys. Yeah, so over these last few years, you should know that I did raise capital. I had to change the business model several times and adapt to the lack of finance that I had. But all that time, I was always thinking, like, how can we actually make this better? How can we democratize finance and seed capital? How can we make things better? And I did a couple of initiatives. I did like crowdfund.ky, where I was trying to. This was not specifically for anything I was doing, but I did think it would be a great way to start to cultivate a seed capital culture. It was about indigenous products and people throwing in 10, 20, $100 to be able to see things. And we would be able to say, we actually have a seed capital culture here. But one of the important things there was if we were actually to move ahead with this project, how would local retailers react? Because ultimately they would be carrying these products in their store. I've had mixed responses, but ultimately, like one of the largest retailers on Ireland looked at this crowdfunding site and said, "What? You're looking for money from people to pay for products that haven't been created yet? Get off the phone! Like, what are you, a fraudster, a thief?" But I'm like, "Whoa, it's a crowdfunding site, man!" Like, but anyway, so even best efforts fall on deaf ears, but.
How did that work? Were people expected to contribute money for equity in the business or for some
No.
cash flow rights? Or?
So there's been 3 projects I have done in relation to kind of creating or generating kind of a seed capital or kind of a cultivating culture here. Ultimately, this was like looking at we have this huge sorry, this is a pre-COVID project, just to clarify. But we had tourists coming here every day, and I just noticed thousands upon thousands of people come here every day, and I wonder what they leave with. What is that one product that they want to bring back to friends and family and say, "I was to Cayman. This is what I'm bringing back." And there was just nothing there, and I was just like, everyone said rum cake, and well, it's Jamaican. I mean, I do appreciate it's made in Cayman, but there's so much more to offer. So even at the most basic level, to try and cultivate this economy was just met with massive stumbling blocks. So I had thought that if it's this hard at this level, go big or go home, and so I do have reasonably strong opinions on how we cultivate that's where should I go?
Sure, we'll continue if you like. We want to hear ideas or thoughts,
so
not necessarily things that.
No, absolutely, thank you. So when it comes to seed capital, it's pretty hard. I've gone out there, I've met many people, they've heard my story, some of them find it compelling, some less so, some have invested, some haven't. But it's really about trying to what stopped people from engaging, what stopped people from putting money down, what stopped people the idea is good and people all find it compelling. But nobody wants to be the first person in. This kind of kind of raises a whole series of issues. I just want to talk about innovation for a moment and speak to what Aaron was talking about. Innovation can never exist in an over-regulated market, and all of us know that we're in a particularly sticky market in terms of regulation. And then you have to say, well, why does this exist? And you're looking at funds here who bring a huge amount of liquidity to Ireland, but it doesn't bleed into the domestic economy. SEMA have to keep on regulating to meet the demands of these funds to keep everything equitable. And I wonder where the equity is. I think that these funds, a simple point is all of us here today, we're here to innovate, and government is here to legislate. But we need to tell them how they need to legislate in order to meet the demands of everybody and their needs here. So I think that it would be reasonably equitable if funds gave 0.01 or 0.001% of funds under management would have to be invested domestically. If you had if somebody comes to you and you're asking for capital, or who has invested in you, and you say, I've been invested in by this portfolio, these are the companies in this portfolio, people would sit up, people would say, wow, dollar for dollar, these are some very good firms, I would certainly like to participate. even government could participate. At the back of an envelope, I would imagine that if the government invested $1 in a startup, they would get a minimum of $100 in return. Like, and that's making a consideration that 20% of all startups will fail year one, 60% by year 5. But it's all about basically getting people to islands, having them pay their dues, and being able to encourage and cultivate this entrepreneurial environment. I see Josh like twitching, so I'm just like, I feel like I've definitely gone beyond my time.
I'm interested in these ideas. That was one of the things that we're looking for. Aaron and Mike, from some of the other areas that you've seen, can we look for inspiration from other areas that have been successful, from Silicon Valley, from Israel or Estonia, or other places that have cultivated a system that works for venture capital, that promotes innovation?
All right, so Mike said I should go first. I think Ian really hit the nail on the head in looking at what made these ecosystems successful. And of course, yes, that's different to what makes an innovative business successful, which actually, based on what I've seen and research, is timing. After that comes the team and the idea and all of these things, and really that marriage between idea and timing. But when you want to develop an ecosystem that supports businesses like that, funding is an essential part of it. And even looking at the venture capital landscape, the most successful venture capitalists that I've seen, at least on a large scale, are actually the entrepreneurs who've done really well and recognize the need, identify with the struggle, and turn around to give back. And those are the most successful. And to tie in again to what we discussed before, it's not so much a matter of they know how to put them in the right boxes the right way, because they identify with the struggle, because they know what the process is like. They have a different lens that they look through. And that lens is one that identifies with the winner, because they're already a winner. They've already been successful. So, and that's where we get the statement, they invest in people. That identification is made. But to attract these people to even look into your, Cayman Enterprise City or some other ecosystem, you need to have the right characteristics in place. You need to have the support of the government, the private sector, the people at large. You need to integrate into the society, which is what we saw in So when we speak about Silicon Valley, it's not just Silicon Valley. You need to understand the length and breadth of geography that has been impacted by Silicon Valley. I have friends who work in Silicon Valley and I mean for the largest companies. And when you check the geography of where they live and what has been impacted, it's much greater than that. So it's beyond just funding and getting some entrepreneurs in a space, it's integrating into the society, working with legislation, the government, private sector, etc., understanding the pillars upon which this ecosystem has to stand. And this is over to Mike.
Well, part of what you spoke to about is bringing talent into the equation, because you can have a great team, and part of that team is the background and the experiences that they went through. And part of that comes down to talent and the perseveration that they bring to the table, because they'll do badly one time, and a lot of people would say, no, this isn't for me, and they'll sort of turn it around and try it again, and then again and again until they succeed. And that's exactly the sort of mindset you need to have, because you can get lucky, but you can't continuously be lucky. There has to be, the secret sauce to being lucky all the time, and that's to put in the work and know what you're doing, and to have the people around you.
So it sounds like there's a bunch of ideas, a bunch of things to try, but in general, we need more angel investors here, more people to provide seed capital, perhaps past entrepreneurs willing to invest locally. And then in addition to that, some of the ideas around things that government can do, possibly some structural things, but in general awareness. Being aware that there are some obstacles to entrepreneurship here, and helping to streamline processes for setting up companies and for getting capital in those companies. Things like what Cayman Enterprise City has done to help streamline some of these processes for companies, make government more aware that these things are needed. I'd like to make sure we have enough time for some questions and answers. If you have some questions for the entire panel or for anybody in particular, please raise your hand. Happy to chat for 15 or so minutes.
When you talk about angel capital to be invested, what region, what range of money are we talking about? We're talking 10,000, 100,000, a million. What is the need at that moment of companies typically?
I'll let others comment as well, but in my experience, it's less than $1 million, often less than $500,000. Doesn't usually come from one individual person. It's a bunch of individuals, usually from your extended network, who will put in some money, and they're generally past entrepreneurs, people that started their own businesses and been successful.
Yeah, for those stages, there's a ton of overlap between each one, but it's really, you always want to have enough cash in the bank to keep the lights on for the next 6 months, later stages, maybe 12 months. And it really depends on how much you're spending on the company. Because at an angel, it's probably you and you've got an office and you've got all of this, costs to keep it going and to do your development and to get the ball rolling on this, and you don't have any revenue yet. So you need as much money as you need to, stay in business for the next 6 months, and that can be 50 or it could be 200.
There are two main dynamics that you're talking about there, because obviously it depends on the kind of business and their particular needs. So that's one thing. And then the other thing is there's some money. Like here on this island, we have a very distinct advantage. One has to appreciate that most every country in the world has a limitation on the amount of members or amount of investors they could have in a company. Generally, it's 99 investors. Here in this island, there's no limitation on the amount of investors you can have, which gives you a very kind of dynamic kind of range of investors. For me, for the experiences that I've gone through, if somebody came to me and said, do you want $100,000 or do you want me to give you $10,000 and introduce me to 10 of your friends? $10,000 and 10 of your friends, please, because ultimately, this country is so small, it depends on the network and the needs. We should be able to really change the conversation about seed capital, especially early seed in this island, and people that come forward and say, listen, I got 10 grand, you seem like a cool guy, I'll roll with it, I'll introduce you to some of my friends, they might be interested too. That's more important than one guy and just the doors closing down, because that's, in my experience, getting money in, doors are closed, I'm knocking on doors, the door opens again sometime several months down the line. If you have the ability to give anything and to distribute that wealth to many different companies, you're basically, you're creating a better portfolio for you, you're creating far more opportunity for many more people. So I'd say 10. Thank you.
Yeah, that portfolio effect is important. I've advised angel advisors in the U.S. and because, as Ian mentioned earlier, there's a high rate of failure of these young businesses. You don't want to put all your eggs in one basket. You really need to spread it out to a bunch of different ones. And the number that you need to hit to create a portfolio that's reasonably risk balanced is generally between 15 and 20 investments to get reasonable risk diversification in them. So if you